Hey investors, Joe here. I want to give you a specific protocol for how to handle stocks going into earnings. This set of rules has saved me a ton of money. One of the principal things that kept me from doing well in the market in years past was getting beaten up on earning releases. And yesterday I showed you a stock, IGT, with my intention of you putting it on your watch list so that you would be ready to buy if we saw positive earnings, which we did not. My intention was not for you to buy right before earnings, but I realize now that I didn't tell you that, and I apologize for not doing so. So I'm going to give you these set of rules right now. Then you'll have them for every stock in the future. So first, let me show you how to find the earnings date. And then let me tell you what to do with the stock going into earnings. And then third, let me show you our goal, the only goal that we should have during earnings seasons. And before I do that, let me just remind you, this is not financial advice. This is just for education purposes and maybe for a little bit of entertainment too. Okay, so first let me show you how to find the earnings date. Now, if you happen to subscribe to MarketSmith, it's really easy, because they mark all of the earnings postings, and they give you down in this right hand corner, it'll tell you EPS due, and it'll give you the estimate. Now these just came out, so now it's a few months from now, and then when it gets close, it'll say 3 days away, 1 day away, etc. So that makes it real easy, although you still need to know whether it's pre-market or post-market, which unfortunately MarketSmith doesn't do. So here's what you do whether you have MarketSmith or not. So you go to your web browser of choice and you type in the company, stock symbol, and then you type in IR for investor relations. Now I did this just a minute ago to make sure it would work. I knew it would, but you got to make sure. So here it is already in the search bar. But so we go Costco IR. And then it'll say investor relations, and you want to find news releases or events. I don't see events, so you go news releases, and then you look here and you see if there's a press release about when the next earnings report is. Now this is just a list of the ones that have happened, so I got to go over here in this case and go to event calendar, and then here it is, March 3rd, which is Thursday at 1:15. So Costco is going to post earnings for Q2 on Thursday after market close. This system will work for every stock. Try it on all of yours and you'll find the earnings dates really quickly. Now, let me give you a protocol on what to do headed into earnings. And this isn't my system. This is from the greatest investor, in my opinion, Mark Minervini. So be aware of when earnings are. We figured that out. So don't buy right before earnings. Don't buy in the post-market. Don't buy in the pre-market. If you want to buy a few days ahead of time, according to your logic, you certainly can do so. But here's the important thing. If you do not have a cushion of 5% or more going into the earnings report, then, in my opinion, you should sell. And if that's the morning of or the day before, you can hold it right up until right before the date of the release. But if you don't have that cushion, then you want to sell, because stocks in today's market routinely drop 5 or 10 or 15%, sometimes even more, and oftentimes they gap down. So you want to have a cushion of at least 5%. Otherwise, I don't care if it's your favorite stock in the world. Honestly, you should be safe and sell it. Now, if you do have a cushion, then you got a couple options. One thing you can do is you can sell part of it. You can sell a half, or you can sell a third. You can look at what the other companies in the industry have done. Are they gapping up? Are they going up on earnings? Are they crashing? That should really bias your opinion, because industry, certainly stocks vary, but stocks in a given industry often move together. So you consider selling part of it and removing some of the risk, and then backstop set your sell stop at your purchase price at your break-even point. But remember, although this would have protected you in the case of IGT, a stop won't protect you from a gap down. It'll sell at wherever it gaps in the morning. Now, if you decide to buy on the open on a positive reaction, please do a very small starter position only. Stocks are wildly volatile the day of an earnings release. And let me show you the goal, and then I'll show you what happened with IGT. So, in my opinion, our goal going into earnings is only one thing, and that is not to lose money. People buy going into earnings all the time because they think about that big gap up that's going to happen, and they get FOMO, but in my experience, it's not worth it. That's essentially gambling. It doesn't matter if the stock has blowout earnings. It still might go down, and worse, it still might gap down. In my opinion, that's gambling. And if you want to gamble, go to the casino. We are doing everything we can to take the risk out of investing. Now, let me show you what happened with IGT. Now, first of all, the earnings that they released are really pretty good, which just goes to show it's a guessing game as to how the market's going to react. So revenue was up 20%. Income was up 107%. Its yield is still 3%. It's supposed to make $1.75 for 2022. So, those numbers look good. The PE ratio is elevated, which makes this high risk. And if you look at the chart, despite the pullback, it's actually sitting pretty nicely. It's getting some support down here, and it's near all-time highs. It's made this huge, 4-year base now. I still like this stock long term, but now we got to wait for it to set up a little bit more. And this is the chart that I showed you yesterday, and I showed you this VCP, volatility contraction pattern, the volatility getting smaller and smaller. And I bought it a few days ago on this bounce off here, on this white candle. Actually, I'm sorry, on this white candle right when it cleared resistance at 29.5. So I had a little bit of a cushion going into earnings. And as I've been saying for a couple months now, your positions should be tiny right now because this market is about as volatile as it gets. And then I set my stop right down here, about 27.75, and I'll show you, I measured this. So when the stock broke down, I got stopped out at about a 6.5% loss, which is a bummer, right? But that's not going to break my bank, so to speak. Now, what do we do from here? Well, let's just wait. Ideally, if you're not in it already, it'll come all the way back down to this 200-day exponential moving average, bounce off with strength, and then you could try a little pullback by there and put a stop beneath the low of that day. That'd be a pretty high reward, low risk move. Or you could wait. Let's see it tighten up over here on the right side and clear this supply and get back up here, at 30 or so, and then we'll try again. I suspect that when the market rights itself, and it will, markets don't stand a correction forever, that this stock is going to break out of this big base. And you know how terrible the market has been the last few weeks. Look how tight this was. This stock was going up in this down market until this earnings report scare. So those are my thoughts on how to prepare for earnings releases. There's nothing worse than having a big chunk of your account taken out by a big gap down. So we got to be really careful and be ready with the steps that I showed you. Thanks for listening, everybody. Please consider pressing the like button if you like this video. That'll help it get out to more people and hopefully help protect people during earnings season. Take care, everybody.